All right, welcome back to Nadlin Forum Podcast Daily. I'm Ruby, joined as always by Lior. And today's episode is a bit of a whirlwind, because honestly, when was the last time global leaders felt the need to warn a US president not to mess with the Fed? It's wild.
Yeah, it's not something we see every election cycle, you know. This time we've got Christine Lagarde, it doesn't get much more heavyweight, stepping in from the European Central Bank, basically saying, hey, don't undermine Fed independence, or you might break more than just the American economy.
And the direct quote from Lagarde blew my mind a bit. She said, if the Fed became the tool of whoever's in the White House, the consequences would be, and I'm quoting here, extremely concerning, not just for the US, for the whole global market. It's not just hand-wringing. We've seen this play out in other countries, yeah?
Absolutely. Political interference isn't theoretical, right? I mean, just look at what happened in places like Turkey. If you change central bank leadership, every time the government wants cheaper loans, you get runaway inflation, a currency that's dropping every week, stocks in free fall.
It's chaos. And look, not to name drop, but in my past life covering finance media, remember Leo? I did a whole thing on Turkey's central bank shakeup. Spooked investors piled out overnight. No one could trust the lira or the data. It honestly left scars on the housing market there for years. People think it's just a headline, but it gets ugly fast.
Right. And it's always tempting for politicians to want lower rates. But the trade-off is, like we saw then, higher long-term inflation and chaos. And now we've got Trump threatening to remove Fed Chair Powell and more aggressively lately, Lisa Cook, over this alleged mortgage fraud thing, which hasn't led to any charges or convictions.
Exactly. So this isn't just about personalities or drama. The independence of the Fed basically underpins the stability of the dollar, mortgage rates, the stock market. It filters all the way down, doesn't it?
Yeah. And let's dig into the legal fight here because it's historic. Trump's trying to actually remove Lisa Cook, which, from what I can tell, is literally the first time in US history a president's tried this. There's this thing in the law, for cause removal. It's not supposed to be whenever you disagree with someone. It's serious misconduct type stuff.
And Cook, she's denying any wrongdoing, not even been charged, so the legal system has a real puzzle on its hands. If the courts side with Trump, it sets this precedent where, any president can sack a governor if they don't cut rates fast enough.
I might be wrong about this, but the whole for-cause bit has kept regulatory agencies like the Fed, the SEC, others insulated. If that's up for grabs now, you better believe it'll go up to the Supreme Court. But it's not just legal noise, Ruby. From my side, in the startup and finance worlds, every time leadership changes at an agency, markets and businesses scramble. Real estate finance, if you swap in someone who'll cut rates on command, it changes everything. Cost of loans, investor appetite, underwriting standards, kind of like toppling the first domino.
Completely. And it's not even just mortgages and real estate. Investors start questioning whether the US is still the safe bet. People might not realize how much rests on credibility. Like, if you remember our chat on rising core inflation, it's always on a knife edge. Imagine if expertise gave way to politics in every big decision.
Yeah, you'd see capital, investors, everyone hesitate. Less stability, more volatility. So this case with Lisa Cook isn't just about her, it's about how future presidents might flex their power,
Speaking of volatility, let's talk numbers. The Fed's kept rates steady so far this year, even with inflation a bit too hot for their liking. Core PCE, which they love, is at 2.9%. CPI is not much better. Headline at 2.7%, core at 3.1%. Not what the Fed wants, but then July's jobs report lands soft, complicating everything for their September meeting.
Yeah, so now the market's almost betting on a September rate cut. Like, FedWatch is popping up 89.7% odds for a quarter point drop. It's high. But like we discussed before, political pressure at the Fed makes investors even more nervous. If they think the decision's political instead of data-driven, you don't just get market jitters, you actually risk higher long-term rates if foreign investors bail out of US bonds. It's a tricky balance.
And Lagarde's point, looping back, is that whatever happens here, a rate cut, a leadership tussle, whatever, it ripples everywhere. She basically said, if global markets lose faith in the Fed, you don't just get instability in New York or Dallas. Mortgages in Sydney, property values in London, they all wobble. We actually saw something similar, didn't we? When the US slowed home price growth, it triggered reactions globally. We talked about that in our Home Price Growth Hits the Brakes episode.
Exactly. These shocks go deep. So for our listeners thinking about their next real estate move or mortgage, keep an eye on the Fed for sure, but also on these independent stories. They matter more to your rates and valuations than most people realize.
All right, let's leave it there for today. This story's not going away soon, so we'll keep you posted as the legal and economic fallout unfolds. Leon, thanks for keeping things sharp as always, and thanks to everyone tuning in. Catch us next time for more real estate and economic news you actually care about. See you, Leon.
Thanks, Ruby. Looking forward to the next episode. Bye, everyone. Stay savvy out there.